Hi, good afternoon. My name is Josh Epstein. I am the marketing specialist here for TDA Perks. Thanks for joining us. TDA Perks connects members to professional and life resources, insurance options, money and time-saving programs, CE resources, networking events, and much more. The title for today's webinar is Surcharging Patients for Credit Card Payments. Bad or good idea? So our presenter is Phil Nieto with longtime Perks vendor Best Card. They're endorsed by several dental associations across the country. And I also want to mention that they've been able to save members an average of over 5,500, which is 20%, 27% annually. And that's such a huge number, and we appreciate that. And I also want to mention that Best Card is known nationwide for the savings they provide, but more so, in my opinion, for their approach and customer service. And I believe it's second to none and makes a huge difference to our members. And I want you to make sure that you're aware of that. I also want to make sure you're aware of the latest TDA member benefit, which is the Dental Concierge CE tracking app. And that app allows you to track your CE, track what you've completed and what you lack. And you can also get high quality courses at a low cost if you're a TDA member. Again, it's 100% free to download for TDA members, and you can submit that information to the TSPDE, and it was created by the association here for TDA members. 100% free, and I urge you to download it at tdadentalconcierge.com. And with all that said, Phil, ready to rock?
Perfect. Thanks, Josh.
Yes, sir.
So this is Phil Nieto from Best Card. Today we're going to be looking at credit card surcharging, which is a trend that started in credit card processing probably 7 or 8 years ago, but has kind of popped up again with inflation and costs increasing. So today we're going to kind of just take a look at what does surcharging entail, when is it a good idea, and when is it possibly a bad idea for your practice. So in that vein, over the last couple of years, ever since COVID, really, we've seen a really kind of tight spot for a lot of dental offices. A lot of providers have really felt squeezed by some of the higher costs associated with, PPE, medical equipment, staffing time, while also receiving stagnant or even like diminished compensation from insurance providers. In the same vein, a lot of dental offices are frankly just paying too much for their credit card processing. So while a good competitive credit card processor should try to come in at around 2% of 2% of the total amount that you ran should be about the fees. We're seeing a lot of offices that are paying 3%, 5%. We see offices actually all the time that are even paying more than 10% to their credit card processor. So when you look at those numbers, when you look at, having more difficulty making your monthly profits, kind of excel, kind of high costs for accepting payments, especially if you're not working with a good provider, it's completely understandable that, looking at credit card processing costs could be a large potential for savings. And in that vein, we've seen a lot of offices like, credit card processors start marketing surcharging really aggressively in the dental market. So when that comes out, it's, a lot of times it's marketed with, hey, did you know that you can now get free credit card processing? Or you just pay a flat rate of $65 per month. Unfortunately, this gets pushed really heavily because if you actually look at how surcharging works, the payments to the credit card processors are way larger on a surcharging program than on like a competitive credit card processing program. So the marketing for this is really aggressive. The salespeople can be really aggressive, but getting an idea of like how credit card processing fees actually work can kind of make a big difference in understanding whether or not a surcharge is a great idea. So all credit card processors, regardless of any kind of claim that they have the same base fees that they pay to the card brands. Every time a business rents a card in the United States, your credit card machine or your online system or anything like that knows exactly what type of card it is, how you're running it, and then assigns the correct rate that every credit card processor pays to Visa or MasterCard to run that card. No credit card processor gets a better deal. There are no free lunches in credit card processing where, oh, now there's no fees for it. That said, not all credit card processors package those fees the same way. So you'll see flat rates, you'll see surcharges, you'll see interchange plus pricing, which is what we offer. But at the end of the day, the underlying costs are the same. It's what we charge on top of that where we compete. So if somebody is offering free credit card processing, they still have to pay those fees to the card brands. Somebody else is clearly footing the bill as somewhere in the process. And basically, the way that that usually comes out is as an extra charge to your patients. So as a dental practice evaluating this, we're kind of going to look at 3 big questions. How does surcharging work? is it relatively simple? What are the kind of caveats? Two, is it compliant with laws and regulations? The laws in this case are going to be state laws. The regulations are going to be the regulations from the card brands themselves. And then three, and probably most important, what should you consider before you start surcharging? It is a kind of a fine line to walk, and you want to make sure at the end of the day you're not doing anything that's going to hurt your practice in the long run. So how does surcharging work? On the left, we have a normal dental office. So dental office A has a patient that's going to pay their bill. It's $500. Their fees are roughly 2%. So basically, dental office A, the patient pays $500, and then the dental office receives the full 500. And probably at the end of the month, they pay their credit card processing fees. 2% of $500 is $10. So the net profit to the office is $490. At dental office B, they have a surcharge of 4% to use cards. So in this case, the patient owes $500. They're actually charged $520 because that 4% surcharge is added. The dentist receives the $500. The credit card processor keeps the $20 charged. So in any kind of surcharging scenario, you're going to have extra fees that are attached. Now, in a dental office in particular, this can be kind of difficult, right? Because what can happen is, if you have an HSA or a flex spending card, the way that those surcharges are reported is like an added fee that may not actually be allowed on that flex spending card or that HSA card. So some of those cards may not be accepted if you decide to add a surcharge. You just may find yourself without the ability to take those HSA and flex payments for your patients. Obviously, that could be a frustration point because of the tax benefits involved. Similarly, insurance payments by virtual card. Basically, while those are payments that we actually try to get dental offices to look at additional payment options because they can be expensive, because those cards have a finite balance. If you have a remittance for $125 and you try to, run it for $125 plus 4%, the card will just decline, right? So basically, a lot of times you have to figure out what you're allowed, what you're able to charge, where with that 4% surcharge added, you end up as close to possible for the full amount for the card. Obviously, on insurance payments, you're already getting a lower remittance, so that's not usually a great deal, right? And then the other one that's kind of a big deal that a lot of offices don't think about, you guys have larger average transactions than many types of businesses. So a surcharge amounts to a much larger additional fee, and that can have big impacts on patient attrition. Think if I go to 7-Eleven and get a soda and they charge me 4%, it's probably a couple of pennies. But, if I'm spending $2,000 on a crown, obviously that takes on a lot higher impact. So what laws or regulations affect surcharging? As far as state laws, there's actually a lot less that's happening these days in like state laws than on the card brand regulation side. So only two states actually completely prohibit surcharging at this point, and that is Connecticut and Massachusetts. A couple other states have additional rules that they require surcharging to kind of comply with. 9 states, including Texas, used to have laws on the books that prohibited surcharging, but those laws were struck down by the courts in recent years. So on the state side, if you're a dental office in Texas, not a problem to be surcharging, but you have to do it in compliance with the card brand regulations. So surcharging has been allowed since 2013 as part of a Visa MasterCard antitrust settlement. Each card brand has their own regulations, and we're going to dive into how those look a little bit on how surcharges need to be performed. And basically, they need to make sure that everything that you do with those surcharges conforms to those regulations because there are limitations that come into effect. So a lot of times when we talk about credit card processing, there's 3 types of surcharges that we've seen with little differences that sometimes make people make it sound like their program is unique. So there's a surcharge where a fee is added to the transaction, but importantly, to be in compliance with card brand regulations, it doesn't apply to any debit transactions. So it is only a payment on credit cards. 2, a cash discount program. These programs kind of claim that they can get around all of the surcharging regulations because they say that any fees added to all of the card transactions are only because it reflects a cash discount as the price listed and that non-cash payments have the extra fee attached. So usually the big delineator between a surcharge and a cash discount, are they also charging debit cards? If they're charging debit cards, you probably have a little bit of a problem, and we'll get into why. Last, an actual cash discount. This is where you pay a lower price for cash than the fee listed. So if it's a $200 procedure and you give them the option to pay with cash and they can pay $195 cash, that's an actual discount. Anything that adds a fee to the transaction is going to be considered a surcharge and needs to make sure it's compliant. So first, understanding the rules on surcharging. At a broad level, you can only surcharge credit card transactions. You cannot surcharge debit transactions. And if you're doing this the right way, your terminal should be able to know the difference between a credit and debit transaction and will apply the charge immediately. So usually on like a compliant surcharging option, you're going to have a surcharge that's applied only to credit cards, and debit cards have an additional rate that will be paid by the office. Now, that's true for debit cards regardless of whether it is a PIN debit where you have the patient put in their PIN number, or if they're just giving you a debit card and you don't even know the difference, your terminal should know, right? Now, as far as like how the surcharge fees work, one of the biggest sticking points in the regulations is that a merchant, a dental office in this case, cannot profit from a surcharge. So you can get rid of your fees by having the patient pay a surcharge, but you can't charge a 4% surcharge when your fees are only 2% and keep the difference. Basically, that surcharge amount is supposed to be calculated quarterly to match the fees charged. For this reason, almost every credit card processor offering surcharge pricing will set a flat rate, and that flat rate will basically stay the same. That way, they don't have to reprogram the terminal on a quarterly basis. Now, as far as getting it set up, like merchants need to register, and like prior to April 15th, they always needed to register with the card brands. Now, with new regulation changes that we'll look at in a minute, you need to register with your back-end clearinghouse 30 days prior to starting surcharging. The merchant must put up like signage at the location, basically at the entrance to the business, at any point of sale location, and any website payment location, and last on the receipts themselves, notifying customers of the surcharge to credit card payments. And the machine must be set up to list a surcharge as a separate line item. It can't just lump it into the total. So if I'm running a $500 transaction and there's a $20 surcharge, right? It needs to have the $500 plus a credit card surcharge line that leads up to the 520. Now, April 15th of this year, which is why we're kind of having this conversation now, Visa actually started changing the regulations again on what you're allowed to do as a surcharging merchant. So previously, you could have a surcharge that was up to 4% of the total. This got lowered to a 3% maximum. So anyone that's surcharging more than that is basically violating Visa's rules. Merchants that surcharge no longer have to register with Visa directly. They now register with their back-end clearinghouse. And last, and kind of importantly, on like the technical side that most people wouldn't think of, Visa set up a specific data field where all surcharges must be reported. And that basically is going to help them enhance monitoring around the country for transactions that don't surcharge correctly. So these were changes that Visa made. I expect the other card brands to make similar changes going forward. That's something we've seen in the past. But the whole idea is, you need to make sure, because there's more eyes on making sure whether or not surcharges are compliant, you need to make sure how your office is set up is compliant as well. Now, a cash discount program. I talked before that these are the ones that we're a little skeptical about. Basically, they claim to work by claiming that all prices listed reflect a cash discount price and that all other payment methods receive an additional fee. So the cash discount might be $200, but the non-cash adjusted price might be, your $200 plus 4%, right? A lot of times with these programs, they say that there are no caps on fees charged by the merchant processor to the cardholder. The program will normally surcharge all cards, whether it's credit or debit. They say that there's no registration required with the card brands because it's not surcharging. And sometimes they'll let you actually turn off the surcharge for individual payments, whereas with regular surcharging, if it's turned on for one payment, it has to be turned on for all payments. There's a little bit of debate as to whether or not these programs are allowed. I will tell you, Best Card, because we've carefully reviewed, all the surcharging regulations, has decided that we will not offer this type of pricing. Visa has issued a statement recently, this was actually from February of 2023, saying a discount for cash is different from a surcharge. Basically, their position is that any price posted has to be the price for all payment methods, and that any discount has to be below that payment method. So while you can decide what's the best fit for your practice, one of my strong recommendations is that anyone considering a cash discount program, I would strongly recommend that you speak to your own legal counsel before implementing. As I said before, cash discount programs are a huge source of revenue for credit card processors that implement them. At the end of the day, a salesperson will say a lot of things to try to make something make sense and make sense for their bottom line. at the end, but you don't want to hurt your practice. And in that vein, potential fines for surcharging incorrectly start at about $5,000. It goes up from there. When violations aren't remedied in a given time, it fetches closer to $25,000 in noncompliance fees. One of the other big ones is you could actually lose the ability to accept credit card payments going in the future. So it is something, like I said, there are tangible, difficulties. There have been credit card processors that have been fined millions of dollars at this point for offering non-compliant programs. Um, Once again, we are always happy to offer surcharging to our clients. Cash discounting, we just say we don't think it's compliant, and we don't want the regulatory hassle, nor do we want that kind of problem for our dental offices. So if we look at an actual cash discount, I mentioned before, basically that's an additional discount below the posted price. So if $100 stated price, $95 with the cash discount is an actual discount. Charging an additional fee above the stated price is not considered, a cash discount. Truth in Lending Act is kind of what like the legal basis for this is on, where they basically list the term regular price means the tagged or posted price for the property of a service if a single price is tagged or posted. So like I said, it is one of those things. A lot of companies think that there are little ways to get around these rules. It's not something that we think we want to support. Now, one of the most important things is that before deciding whether or not to surcharge, what do you want to review as a dental practice? We talked before about some of the difficulties for surcharging specifically in the dental space, but one of the biggest ones is, how is it going to affect your practice long term? So the pros, as far as with the surcharging, it's a method to decrease costs, and especially that's helpful if you have a situation where you might be locked into insurance relationships that don't allow you to increase your fee for service. Well, this is a method where you can increase the cost charged and get rid of a monthly fee. It removes a substantial fee paid by the practice for a lot of dental offices after, their monthly rent, their overhead for staff, and their medical equipment. Credit card processing might be one of the larger monthly fees that they pay on a month-to-month basis. And last, it encourages alternative payment methods that may be lower cost to the practice. Taking a check, taking a cash payment obviously doesn't come with the same costs involved. So, on the whole, you're always looking at what's going to be the best for the bottom line of your business. There are pros to looking at a surcharge option. Unfortunately, the cons, it has the potential to upset patients and can lead to higher attrition. We're going to go into this a lot in the next couple of slides. Um, in addition to this, a lot of the surcharging methods are a little bit more complicated, with certain types of cards getting surcharged, not being able to accept certain types of cards. So accounting for that in the office, training staff to kind of deal with that. The potential for higher accounts receivables is something that we've seen in a lot of dental offices that have jumped onto surcharging, where they have fewer patients that are able to make payment at the day of service or refuse to make payment, since they don't have like a check or enough cash with them. So basically, having that cash outstanding instead of in the business, even at a charge for receiving it via credit card, can sometimes hurt the bottom line of a lot of those offices. And then basically the last one, like I said, the high overall cost with the surcharging fees. As I mentioned before, our average dental office pays, pretty close to 2% in fees. If I'm charging a 3%, fee on a surcharge, that's an overall increase in cost, even if it's being redirected at the patient. So there have been various studies on the effects of like patient loyalty when it comes to surcharges. Generally, between 56 and 95% of customers say they would be highly likely to look at a different business for the same service if they were surcharged for using their preferred payment method. 85% of people will still pay the surcharge as presented. So even that is kind of an important stat, because you don't always get the, diversion to a different payment method that's lower cost that a lot of dental offices are trying to achieve when they implement credit card surcharging. Those patients may very well pay with their credit card. They just may not come back. Also, on the left-hand side, the share of consumers who know to check their receipts for surcharges, about, between those two numbers, about 89% of patients are savvy enough to know, oh, there's been an extra fee added here. And generally, as you can see from the stats on the right, they're not usually that happy about it. So if we're looking at like potential lost earnings and potential savings, basically starting off on the left, how much does the average dental office spend in marketing to like acquire a patient? $150 to $300 tends to be the average from some of the data we found on the dental market. The average dental office has a patient attrition rate of 17%. So, staying above with new patient growth, that 17% margin is what you need to do to have a growing, thriving practice. And then, really importantly, $4,500 is the average revenue generated by the single patient in their lifetime with the practice. So, knowing those numbers, it's kind of important to compare that against the cost of payment data. So, if we assume a 2.22% effective rate, basically looking at those numbers, well, that means that the average dental office running a little bit less than $35,000 per month pays out $759 an average cost per month. Obviously, larger practices, because this is calculated as a percentage, will pay a higher, basically like total amount, but the percentage should stay, like I said, within that range if you have a good credit card processor. At that 2.22% with an average transaction of $285, which is what I took from, the 7,000 dental offices that we work with, that means that the average dental office pays about $6.27 a transaction. So going back a slide, if you're having 56 to 95% of patients even consider going to a different provider for a $6.27 cent average charge per patient, and you might be missing out on $4,500 in revenue, the math is a little bit scary as far as, most dental offices really thrive on getting patients in regularly. Some specialists may have better luck with surcharging than like general dentists or orthodontists. But overall, it is something where you want to make sure that you're kind of thinking through the potential loss as far as income when it comes to patient attrition. My rule of thumb is if your fees are about 2% and you think you're going to lose more than 1 in 50 patients due to implementing a surcharge, overall, it may be moving money around, but it may not actually be saving you money or making you more money in the long run. So when it comes to additional tips to lower costs, because if you decide, hey, a surcharging isn't a good fit, on the left we have kind of, if you're using a payment processor that is charging you, more than 2.5%, there's almost always ways to save a little bit more money by looking at different options. Generally, my easy rule of thumb is if you're looking at credit card processing, you want to ask for interchange plus pricing. It's the most transparent. If you Google how to get a good deal on credit card processing, that's going to be the advice that you find every time. And that is the pricing that Best Card offers to all TDA members. You want to be aware of surcharges or additional made up fees. We have people all the time that have a great rate in one part of their statement, but if you add everything up, you take all the fees paid for a month divided by the dollars processed, they can be paying really high monthly fees altogether. So in that range, that effective rate is where you take those total fees, just everything, and divide that by the dollars processed. If you do that math, your fees should come out to be near 2%. If they're not, then like I said, that's when you might, talk to your current provider or look for other providers that might give you a better deal. The other thing to know in that space, a lot of credit card processors raise their rates every few months. So it's important, even if you sign up with a new processor, that you're getting a great deal. 6 months later, you might be paying a lot more than you anticipated. Best Card guarantees our rates to all TDA members for the life of the account. Not all credit card processors do that, and it's important to do that check every once in a while to make sure that, any program that you're using in the office should still be meeting the needs of your bottom line. Now, assuming you have a good credit card processor, what are the pieces you can do to help keep your costs low in the office? Having staff ask for a debit card is really, really helpful because debit cards run at substantially lower costs than credit card transactions. A debit card from a big bank will have an interchange fee of 0.05% compared to, say, like a rewards card might be at about 2.2%. So to give you an idea, the difference between those two transactions, let's just say for a $10,000 sale for easy math, on the debit card, it's going to cost you $5 to run that payment. On that high-end rewards card, $220. So having staff prompt for a debit card can really help your bottom line. If, 1 in 5 patients changes what card they're going to pay with because of that prompt, great. You just actually saved a lot of money every month. 2, when you have a patient in the office, accepting payment with the card present, so having the patient use the chip on their card or swipe it, or contactless payments, even contactless payments like iPhone, like Apple Pay or Google Wallet or any of those all run at a card present rate that's a lower rate than keying in that exact same card, whether that's, a phone payment, mail payment, or website payment. So getting payment while the patient is in the office can actually help substantially lower the cost. And then last, we talked before about those virtual cards from insurance providers being very expensive. They're probably the most expensive types of cards that you'll take as far as the direct cost paid to the issuer for those. often running above 2.5%, asking insurance providers to pay with another method than a virtual card can really help your bottom line. Once again, that's one of the things that kind of hurts my bottom line. But Best Card, we were founded to help dentists kind of keep their costs under control as part of the Colorado Dental Association. Ask for checks, ask for a direct deposit, sometimes also called an EFT. Those things can have, like I said, should have relatively very low costs compared to taking a credit card, and that can help your bottom line. So, in summary, surcharging payments is an option that you have in your toolbox, but it may not be the best tool for every office. And you really want to think about it carefully before deciding to implement any surcharges like that. Once again, if you are interested in regular credit card processing or like compliance surcharging, Best Card is always happy to help. We do save on our regular processing dollars. Like the average office saves about $5,516 per year. We have streamlined solutions for dental offices, including automatic posting to most of the popular dental softwares. And then last, our customer service and just our kind of commitment to transparency, we really try to help answer questions on what can be a really confusing and opaque industry. So if you'd like to reach out to us, we'd love to talk to any TDA member. You can reach out to us by phone or email. Also, my personal email is phil@bestcardteam.com. I'm always happy to take personal questions or calls. But thank you for your time today. I hope that this information helped kind of evaluate some options for your practice. And if there's anything else that we can do, always feel free to reach out to us. And Josh, thank you for letting us teach a little webinar today.
Yeah, Phil, we appreciate it. Always a lot of great information, but we do have a lot of questions. So I want to dive right into
Yeah,
those.
please.
So yeah, the first one here is, since it sounds like you're not allowed to surcharge debit card transactions, is it possible for us to say that we don't accept debit cards?
So that's actually a really good question. And sometimes I get that on the other side of offices that want to take only debit cards if they're on regular pricing, but don't want to accept any credit cards. Unfortunately, Visa regulations are relatively strict, and so are the other card brands, that if you're taking any Visa cards, you need to accept any card offered. So, if I'm going to take any Visa or any MasterCard, I have to accept all of them. So we can't just turn off the ability to take debit or credit cards. Like I said, if you're taking one, you're taking all. You can do little things in the office to kind of like state a preference, and that usually can kind of go a long ways if you have a good relationship with your patients. But we can't just, unilaterally turn those off. That would be against the regulations and just not something that any credit card processor is allowed to do or should be doing.
Right. Two here. I think my rate's maybe lower than the surcharges you listed. Would I keep the extra profit? Good
So
question.
unfortunately, yeah, it is a good one because, at the end of the day, it, every business is kind of trying to help their bottom line as much as possible. Usually, and I kind of mentioned this before, if the credit card processing, like the surcharge has to be calculated on the actual fees paid, so you're not allowed to profit from it. Most credit card processors, if they're setting up surcharging, will just set up a flat rate that will then match that surcharge. Um, Basically, yeah, there's like if you're doing it in a way where you are paying less in fees than the fee that you're adding, you're doing it incorrectly. And once again, with some of the new regulations that Visa put in place, in particular in April, those changes would actually be like kind of something that might notify them that you're surcharging incorrectly. So, yeah, unfortunately, that is not something that should be allowed if you're getting set up correctly.
Okay. See if we have any others here. Oh, here we are. So how often do rules around surcharging change? So does only Visa get to set the rules?
No, so each of the four card brands has their own rules for surcharging. For example, like American Express's rules are a little bit different than what Visa does, but honestly, maybe even a little bit more restrictive. The surcharging rules have been relatively like, they've changed a couple of times over the last several years. I do anticipate with Visa making these changes to their system that the other card brands will kind of move in tandem in the next couple of months. But they have changed, from year to year a lot more than other card regulations. Previous changes to surcharging were in about 2019. There was another small set of changes in 2018. So it's something that changes from time to time, every couple of years. The difficulty with that is you won't see a lot of credit card processors building out super high-end systems with like, oh, the really cool website payments and other pieces that implement surcharging because like I said, when those rules change, that means they have to change every aspect of that system to now be compliant with it. So the fact that they change fairly regularly is part of why you see kind of relatively simple systems if you're going to be implementing a surcharge.
All right. Let's see. All right. Do I need special equipment to do surcharging?
So generally, the answer is yes, kind of. Most credit card readers have, compliant like surcharging file builds. Every time we download a credit card reader, we have to set up a bunch of provisions for it. And one of the pieces of that is like, oh, is this going to run a surcharge? So a lot of existing terminals may have a compliant file build that can basically do surcharging, but you will need to reach out to your merchant service provider to basically get that added in because yeah, like it's not something that you can probably on your side at all set up, oh, now I want my terminal to do this and just program it in. It's going to be something done by your processor and your backend clearinghouse.
All right. Let's
Anything
see
else?
here. Yeah, I think we've got one more here. All right. So, have you had any businesses that tried surcharging? Any dental practices, and what were their experience?
Yeah, so currently we have a handful of dental offices that do use it. They have had kind of the expected experience with, some more difficult conversations with patients than they like. Prior to this, in 2020, we actually launched a surcharging kind of like test case where we had 20 offices around the country basically, start implementing surcharging for a couple of months as kind of, like I said, we asked them, hey, you're kind of interested in this. Would you do it as a favor to us? We had like a 6 month program where we were going to have it in place. At the end of that 6 months, we actually had not a single office that we had set up with surcharging decided to continue using it. Um, and that's kind of matched the feedback that we've had. We've had a lot of offices come to Best Card that had been surcharging previously, but because of the negative, association with like the patients, they were kind of looking at removing it. Some of those offices, the monthly fees and everything else they were being charged were so high. Like one office, for example, we just did a comparison for last week. They were saving a total of $20 by implementing the surcharge with all the extra fees. They were saving $20 for the office per month compared to just our normal pricing without any surcharge being added. So even with shifting off all of the credit card fees onto the patients, the other fees were so high. So it is one of those things. I think we have not seen a lot of offices adopt it. And to be really honest, because I mentioned earlier, we make a lot more money on surcharging than we do on our normal payment methods. The reason why we haven't made a big push for this to be adopted nationwide, most offices that take up surcharging stop doing it within about a year of taking it up. I would always make less money, offer a better value to our customers, than just try to push something that's going to, help our bottom line, but hurt the bottom line of an office in the long run. So that's, like I said, we haven't seen a great response from offices that have taken up surcharging. There are individual offices that may feel very differently, may have, a special relationship with their clientele. But I would just say overall, if you look at it across the board, there's a reason why, Walmart, 7-Eleven, all of those companies that can implement a surcharge have chosen not to. Customer loyalty is really hard to maintain even without doing stuff that actively antagonizes people. And I would tell just about any dental office, like my 2 cents is, if you were to raise your fee for service 4% instead of surcharging 3% on credit cards, then you keep the extra profit instead of me as the credit card processor. And most people are going to be less likely to be angry about a fee that's, like I said, an increase that's buried into the fees rather than a separate line item that they get informed of kind of last minute at the checkout. So, at the end of the day, you guys are dental offices are the ones doing the work every day. I'm kind of the belief that you deserve to keep as much of your money as possible. But yeah, like I said, we just haven't seen a great response from it, unfortunately.
All right. Well, that last answer and how you explain that is very consistent with Best Card and their process and what they believe in my opinion. So we appreciate that, Phil, and we appreciate all the information and you being with us. Ladies and gentlemen, we hope to see you at TDA meeting next month, and you can check out all of our perks vendors there, and we'll all be conveniently located in the perks aisle, which is 600. So just look for the green carpet and you will find Best Card and all of our other additional vendors. So we appreciate you being with us. And as always, Phil, we appreciate you and Best Card.
Yeah, thank you.
All right. Have a great day, everyone.
Bye.
Bye-bye.